Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. In today's analysis, we're taking a close and careful look at recent commentary suggesting that Iraq's monetary and economic reforms have been steadily progressing to a point where the country appears increasingly prepared for a critical phase. What many observers describe as exchange rate readiness. Now, this phrase often generates a lot of excitement in the dinar community. But in this report, we're going to break it down in a grounded, realistic, and an economically sound way, so you can clearly understand what it actually means, what is happening behind the scenes, and what implications this may have for the Iraqi dinar both in the short term and the long term. To begin with, when analysts refer to Iraq's monetary and economic reforms progressing and advancing, they are typically pointing to a combination of structural improvements in fiscal policy, banking systems, currency management, and international financial integration. Over the past several years, Iraq has been working through a series of reforms aimed at stabilizing its economy after periods of volatility caused by oil price fluctuations, political instability, and global economic pressures. One of the key areas of reform has been the modernization of the banking sector. Iraq's financial system historically faced challenges such as limited transparency, weak compliance frameworks, and reliance on cash-based transactions. However, recent efforts have focused on strengthening anti-money laundering controls, improving digital payment infrastructure, and aligning local banking regulations with international standards. These changes are essential because any movement toward a more flexible or market-reflective exchange rate requires a strong and credible financial system that can handle cross-border transactions and maintain investor confidence. The statement that it gets more refined each day reflects the gradual and incremental nature of these reforms. Economic transformation is rarely immediate. Instead, it unfolds through policy adjustments, institutional improvements, and continuous monitoring. In Iraq's case, authorities have been working to stabilize inflation, manage currency auctions more effectively, and reduce the gap between the official exchange rate and the parallel market rate. This gap has historically been a significant issue as it can distort economic activity and reduce trust in the national currency. Now let's address the central phrase in the provided news commentary. Real effective exchange rate readiness. This is a technical concept in economics, often referred to as the real effective exchange rate, or REER. It measures the value of a country's currency against a basket of other currencies, adjusted for inflation differences. In simple terms, it helps determine whether a currency is undervalued or overvalued relative to its trading partners. When analysts say Iraq is moving toward REER readiness, they are generally suggesting that the country is aligning its economic fundamentals, such as inflation rates, productivity levels, trade balances, and foreign reserves, in a way that supports a more balanced and sustainable exchange rate. This does not necessarily mean an immediate or dramatic change in the nominal exchange rate. Instead, it indicates that the underlying economic conditions are becoming more consistent with a stable and credible currency valuation. For Iraqi dinar followers, this distinction is extremely important. There is often confusion between structural readiness and immediate currency revaluation. Readiness means the groundwork is being laid. It does not guarantee that a sudden or large-scale adjustment in the exchange rate will occur in the near term. Central banks, including Iraq's, typically move cautiously when it comes to exchange rate policy, as abrupt changes can create inflationary pressures, disrupt trade, and impact public confidence. In the short term, what we may expect from continued reform progress is greater exchange rate stability rather than dramatic shifts. Stability itself is a significant achievement, especially for an economy that has faced external shocks and internal challenges. A stable exchange rate helps businesses plan, encourages investment, and reduces uncertainty for both domestic and international stakeholders. Additionally, ongoing improvements in foreign currency reserves play a critical role. Iraq has benefited from periods of strong oil revenues, which have contributed to an increase in reserves held by the central bank. These reserves act as a buffer, allowing the central bank to manage currency fluctuations and support the dinar when needed. Strong reserves are also a key indicator that international financial institutions and investors look at when assessing a country's economic health. Another important aspect of exchange rate readiness is the relationship between fiscal policy and monetary policy. Iraq has been working to better coordinate government spending with central bank objectives. Reducing budget deficits, controlling public debt, and ensuring efficient allocation of resources all contribute to a more stable economic environment. When fiscal discipline improves, it reduces pressure on the central bank to finance government spending, which in turn supports currency stability. In the medium to long term, if Iraq continues on this reform path, the potential benefits could be more substantial. A well-functioning financial system, combined with stable macroeconomic indicators, can attract foreign investment. Increased investment can lead to job creation, infrastructure development, and diversification of the economy beyond oil dependence. Over time, these factors can strengthen the overall value and credibility of the national currency. However, it is also important to acknowledge the challenges that remain. Iraq's economy is still heavily reliant on oil exports, which means it is vulnerable to global energy price fluctuations. Diversification efforts are ongoing, but will take time to fully materialize. Political stability is another key factor. Economic reforms are most effective when supported by consistent governance and policy continuity. Furthermore, the global economic environment plays a role. Interest rate policies in major economies, fluctuations in commodity prices, and geopolitical developments can all influence exchange rates. Iraq does not operate in isolation, and its currency policy must take into account these external factors. From a practical perspective, what does all of this mean for individuals who follow or hold interest in the Iraqi dinar? The main takeaway is that progress in reforms is a positive sign, but it should be interpreted as part of a long-term process rather than a trigger for immediate expectations. Responsible analysis focuses on fundamentals, economic data, policy decisions, and institutional developments, rather than speculation. It is also worth noting that central banks typically prioritize stability over rapid appreciation. A sudden increase in currency value, if not supported by economic fundamentals, can actually harm exports and create imbalances. Therefore, any adjustments to the exchange rate are likely to be measured, strategic, and aligned with broader economic goals. The phrase "completely ready for what we're waiting for" can be interpreted in multiple ways. But from a professional financial perspective, readiness should be understood as preparedness for policy flexibility rather than a predetermined event. It suggests that the systems, frameworks, and indicators are being aligned to give policymakers more options in the future. As we continue to monitor developments, key indicators to watch include inflation trends, foreign reserve levels, government budget performance, and updates from the central bank regarding monetary policy. Transparency in these areas will provide clearer insights into the direction of Iraq's economic strategy. In conclusion, Iraq's ongoing monetary and economic reforms represent a meaningful and necessary step toward long-term stability and growth. The concept of real effective exchange rate readiness highlights the importance of aligning economic fundamentals rather than focusing solely on nominal exchange rate movements. While the progress is encouraging, it should be viewed within the context of a gradual and carefully managed process. For Iraqi dinar followers, the most prudent approach is to stay informed, rely on credible information, and maintain realistic expectations based on economic data rather than speculation. The path forward is shaped by policy decisions, global conditions, and the continued implementation of reforms. If you found this analysis helpful and want to stay updated with responsible and factual Iraqi dinar news, make sure to subscribe to the channel and like the video. And as always, remember that this content is for informational purposes only and should not be considered financial advice.